Hey, welcome everybody to the 40 Finance channel, and this is part 2 of my series 20 stocks under $20 to watch in the year 2020. Lots of 20s in there. Doing this video here at the end of March, right in the thick of all the health scares that are going on. So there is a lot of good deals on the market. There is a lot of stocks under $20. I tried to pick through the list to identify some companies that I'm familiar with and companies that I think have a reasonable chance at least to bounce back from their current stock price. As always, the disclaimer, these videos are for entertainment purposes only. Please talk to a financial professional before you make any investment decisions. But for those of you who do like stock market analysis, personal finance tips, and investment ideas, please subscribe to the 40 Finance channel. Really appreciate all the support we've gotten so far. All right, first on our list today is a company, Ally Financial. Ally is essentially an online bank that does checking accounts, savings accounts. They also have a retail investment platform and a managed portfolio investing platform. And I am a customer of Ally Financial, so I have an online savings account. I have one retail brokerage account with them, and the experience for me has been positive across the board. It's nice to be able to open up these accounts online without having to go into a bank and talk to people and all that stuff. So the main attraction for most Ally customers, I imagine, is their high yield savings account, which obviously with interest rates low, it's not very high yield, but they're always competitive with the highest of interest rates that are available. I'm not affiliated with Ally in any way as of this video. It's just a service that I use. Stock price today for Ally Financial's $15.77. That's down about 50% from their 52-week high of $35.42. You have a current PE of 364 and a forward PE of 418. As I say on other videos, forward PEs right now you may want to take with a grain of salt because they're usually based on full year projections that were created in January, and the world has obviously moved on quite a bit since that time. Ally has $3.6 billion cash on hand and a debt load of $39.7 billion. Debt load in this instance is probably a little higher than we'd like to see, but obviously when you're in stocks that are under $20, you're going to find instances of higher debt loads. And generally speaking, I think Ally is in a good shape financially outside of, the current conditions. The debt load would be pretty manageable considering their asset base. It's an odd time, and thus the discount on their stock. And I think it makes for a pretty good bounce back candidate. You see up in the corner, I recorded the information from Tip Ranks, trying to consolidate my slides here because we have 10 stocks to get through. You got a target price of $32.17. Out of all the top performing analysts covering Ally, you have 3 buys, 4 holds, and 0 sells. And quick plug here for Tip Ranks. It's a service that I've been using as a paying customer for over a year now. If you're into stock research and you have some time on your hands and you really like seeing what other analysts think about stocks and get some new investing ideas, I definitely recommend it. And my affiliate link is down below. They have a 20% off special right now. So if you want to dig into some extra stock research and lots of cool tools to measure the sentiment of the market and support the channel at the same time, then please check for my Tip Ranks link down below. All right, next on the board is a company, GLUU Mobile. And GLUU Mobile is basically a network of game apps or app games or whatever the order of that is. So they produce free-to-play games that you download in the App Store, and they make different revenue streams, mostly advertising, through the popularity of those games. And they have several popular titles, and that's what makes GLUU attractive, is they're starting to get into this point as they get bigger. Not only can they develop their own titles, but they may be getting to a point where they can purchase titles or license games that are already made, bring those to a bigger audience, and of course make some royalties on that. So I think in this this day and age, there's definitely room in everyone's portfolio for sort of an app-based play. And if you're interested in the gaming niche, GLUU is one that you can get in for a relatively cheap price and, you know, do your research, see what you think about the prospects of the company. But I don't see the world of apps and games going away anytime soon. Stock price today is at $6.11. We have a current PE ratio of 101 with a forward PE of 26.88. So again, at least in the beginning of the year, the prospect for GLUU Mobile to improve their profitability looks pretty strong because that's a nice gap between current PE and forward PE. They have $127 million in cash and about $41 million in debt. So a pretty good ratio there as far as being able to keep the lights on. And you'll notice with GLUU over the year-to-date chart that's on the board, they got up into the $8 range earlier this year, then the market came down and there was a great buying opportunity under $5. It's ticked its way back up here to $6.11. But maybe if we see another market downturn, you can try to target that $5 price, and I think you'd be doing pretty good. On the tip rank side of things, analysts are projecting a median price target of $7.67. So not a huge amount of upside, but again, depending on when you buy the stock, you could pad that by another $1 or $2. You got 4 buys, no holds, and no sells. So pretty good signals coming from the best performing analysts with GLUU Mobile. And I think it's one to at least add to your watch list going forward over the next 3 to 6 months in this crisis we're in. Okay, next on the board is Limelight Networks. And what Limelight Networks does is they're basically a content network for big publishers, app developers, websites, all those things. Basically what Limelight does is they host your content not only for security purposes because they protect against attacks and stuff like that, but the bigger thing is content performance now, speed of delivery, speed of loading is becoming much more of a concern for publishers because they want folks to have the best possible experience. You know, if you download an app and it's slow and wonky and doesn't load, it's frustrating and you just delete it. And so Limelight offers services where they basically host the content of the app and websites, videos, whatever. And then across the world, they have a network of servers that can deliver the fastest possible download speed to whoever's downloading the content on the other side. So it's a very valuable service. There's also some security features with using a network like this that'll be top of publishers' minds. And generally speaking, I think this is a service that's going to be in demand for the foreseeable future. Stock price today at $5.25. No PE on the board as of yet, but the forward PE 71.43, so it looks like there's a shot for profitability this year. You got $18 million in cash, $15 million in debt, so not too bad on the ratio there. And year to date, they hit a high point in and around the $6 range, and they dropped as low as roughly $3.50 it looks like during the big crash, and now you're back up to $5.25. So very similar to GLUU Mobile, maybe there's a down day where you can shave some money off this price. On the tip rank side of things, there was only one analyst who was covering Limelight here, out of the best performing guys anyhow, and you got one buy at a $7 target. So with only one analyst, obviously you're going to want to dig in deeper to some of the reviews of the network and make sure you do in-depth research to form your own opinion. But I see Limelight as a relatively stable business that I think carries on for the foreseeable future. I don't think it goes from $0 to $1 million, but you got to figure that when companies sign up for these content delivery networks, you know, they're basically locked in place for at least a year. And assuming that Limelight does well, then just like any other subscription business, you're going to be building on top of your existing subscriber base. You're going to have the opportunity over the course of time to really have a nice foundation of revenue coming in. And if you perform well, then of course, new user acquisition becomes much easier. All right, next on the board today is Bloomin Brands, and I will say that this is probably one of the riskier plays on the board. Bloomin Brands is a restaurant group that is home to Outback Steakhouse, Bonefish Grill, Carrabba's. There's probably a couple others I'm forgetting, but as we all know, in today's world right now, restaurants are absolutely getting hammered, right? So, there's not much real positive news coming out for restaurants over the next 2 or 3 weeks anyhow. So what you have here is a potential buy low opportunity, and that's why it's on the board today. Price for Bloomin Brands comes in at an ominous $6.66, and that is well off of this year's high point of around $24 or $25. So you've basically tanked pretty substantially if you were a previous or existing stockholder of Bloomin Brands. But if you weren't, and you know a lot about the restaurant industry and you can look through their reports and see what they have planned, this could definitely be sort of that scrap heap play. You got a minuscule PE ratio right now of 459. There is no forward PE that I could find on Yahoo Finance, so that could be an adjustment. I'm sure they pulled their 2020 guidance at some point when this happened, so maybe that's why we don't see a registered forward PE. Cash on hand is $67 million, and there's a small typo there on the debt number, but it's $2.5 billion, $2.5 billion in debt. So you definitely are carrying some debt, and that's pretty common of the restaurant industry as a whole. So there is some risk baked in. On the tip rank side, you have a target of $18.40, and this has been updated since the health scares. We have 2 buys, 3 holds, and no sells. So bottom line, if you're looking at Bloomin Brands, you're thinking to yourself, hey, restaurants come back online. Bloomin Brands gets their financial house in order during the downturn, and when they start making revenue again, they can translate that into profits. So riskier play, but you're definitely buying off the scrap heap right now. If you feel good that America's restaurants get back and running sooner rather than later, then this might be a stock to add to your watch list. Okay, next stock on the board is Revolve Group. And Revolve Group is basically an online fashion retailer that has become very popular with the younger generation, and they're definitely like reinventing the business proposition for fashion retailers online. And that is a world, I think, in general, once our economy recovers and people start to spend a little more on consumer discretionary, has the opportunity to do really well into the future. Revolve Group comes in at $8.30 here right now. We do not have a current PE. However, the original forward PE was slated to land about $16.95. So Revolve Group is another small company here where profits are expected to start rolling in soon. Those plans may have gotten pushed back in today's environment, but at least they were heading in the right direction. Cash on hand of $65 million, and I could not find any record of long-term debt. So unless I missed it on the couple websites I checked, I have them down as 0 long-term debt. Please make sure to double check that number and don't just take my word for it. On the tip rank side of things, you have a target price of $18.13. You got 3 buys, 5 holds, and 0 sells. And I should call out that Revolve is a relatively recent IPO. I want to say 6 to 8 months ago, something like that. Double check that number. But you have an IPO here that's about to turn profitable in the shorter term. So exciting things going on at Revolve. Dig in and see what their business model is. See, what is their projection going forward for 2020 in light of current news. But the stock's traded as high as as $48. That was probably closer to the IPO release, but even this year it was in and around 25. So there's definitely an opportunity here with Revolve if you believe in the product and the business. All right, next up we have Evolent Health. And Evolent Health is a very interesting company. They have one portion of their sales comes through an insurance arm where they offer insurance to people like you and I. But then they have this healthcare management system that general practitioners and doctors use in their office. And the whole goal of it, ironically enough in this case, is to actually charge patients less. So what they're trying to do is bring a new standard in managed care, and they kind of track who you are as a patient. They do recommend, you know, a test for this or a test for that, but they're trying to keep the redundancy in healthcare and the results of going to the doctor at their peak. So it's more or less an efficiency model for managed care. And the stuff that I read a couple months ago was physicians actually liked it, and they felt like it made the patients feel better about the care because they were seeing results, or they were getting action items instead of constantly going for testing and x-rays and all these things. So it's definitely one to look at for the future, especially if it takes off big and ends up saving healthcare systems a lot of money and patients a lot of money, because what you have there is the opportunity, you know, to obviously grow substantially in the future. Stock price today at $5.31. No PE forward or backwards for Evolent, so still working on the profitability. You have cash of $102 million, debt load of $368. And year to date, what we've sort of seen with Evolent, it was kind of a high flyer as a, let's just say, health technology play, and it traded all the way up in that $12.50 range. And as the health scares materialized, you see that it dipped almost down to $3.50. So there was definitely an opportunity to throw a dart at it, and there still is today, with the knowledge that it has traded previously relatively well in that $10 to $13 range. If we look at the tip ranks analyst, you got 5 of the best performing analysts following this one. Target price of $15.40, 5 buys, no holds, no sells. And I guess with Evolent, what I would say is if you're looking for that health technology play, particularly maybe on the insurance or the billing side, then Evolent Health is one to look at. You're going to have to dig in if you're a guy like me and you don't know a ton about medicine. I usually stay away from like pharmacy stocks and things like that, but Evolent's the kind of thing that I can understand, you know, because you're managing care for patients. We're all patients at the end of the day. So, you know, maybe pull it up and do some research and see if there's room for it in your portfolio. All right, next stock today is Purple Innovations, ticker symbol PRPL. And you might at first compare Purple Innovation to Casper mattresses. They're both sort of like IPO stocks that both of them do sell mattresses, but what's interesting about Purple, and I think often gets overlooked, is they have this like entire suite of products. There's like pillows, but they have weighted blankets. They have like, I believe, seat covers and some other things. So they're not just in the mattress game. I'm sure mattresses make up the vast majority of their sales, but what I like about the company is, yes, online mattress sales are hot right now, but I like that they're looking at other avenues, not only to upsell, but to resell to existing customers and potentially make some noise in other related industries. Because let's face it, with the Caspers and some of these other upstarts, online mattress sales are going to be very competitive, but I like what Purple's doing to sort of spread out their risk a little bit. Stock price today at $7.07. No PE ratio currently. The forward PE was projected anyway at 22.27, so profits, even if that gets pushed back, profits are in the horizon, so to speak. We've got cash on hand of $33 million and a debt load of $36 million. So frankly, for an IPO-esque company, ratios are pretty good there. And from a year-to-date standpoint, Purple ran as high as $16 and they've dropped as low as $4. So a lot of spread in there, and we all know why with the market instability. You're trading at 7 right now. On the tip rank side of things, you got 2 best performing analysts. They both have buy signals and a median target price of $16.50. So take a look at Purple. You're obviously going to have to think about consumer discretionary dollars in this current environment. But hey, if you want to, take a stab at it, potentially hold it for 2-3 years. And in that case, I feel like there's only one direction we're going to go from here right now with Purple, unless they just massively screw up their business trajectory. I don't anticipate that happening, but make sure you do your research. All right, next on the board is Digital Turbine, ticker symbol APPS. And Digital Turbine is another service provider for publishers. Namely, they help app makers monetize and promote their apps. So obviously, if you're a talented developer, you make this new Angry Birds game or whatever it is, then you start to get to the point where you're like, hey, I'm good at making games and I'm good at keeping people engaged, but I'm not very good at monetization and I'm not good at increasing my downloads. And in that case, you look for services like Digital Turbine offers to help your app become more profitable and more widely known. Current price today at $4.23. No current PE, forward PE looking at 15.04. So again, we got some profitability on the horizon. Cash of $33 million and a debt load of only $2 million. That makes a lot of sense in this case because when you're a service provider, you don't probably have nearly the overhead that some folks do. Year to date, you were trading as high as that sort of $7.50, $8 range. Obviously now dropped almost 50% into $4.23. And it looks like Digital Turbine in perfect situation when the economy is running as normal, so to speak, was trading fairly consistently between $6 and $7.50. So definitely an opportunity for a bounce back if things go well. On the tip rank side of things, it's a smaller stock, but you still had 2 of the best performing analysts tracking it. You got 2 buys at $8. So probably not $1 million play here. But again, if you can double your money on an inexpensive stock like this and throw a dart at it and keep it for 18 months and see what happens with the company, then you're looking at some pretty good gains depending on how big you scale your position. All right, next on the board is Rosetta Stone. And Rosetta Stone does online language courses and training for people who would like to learn a new language. This is a popular program for people who are getting ready for international travel, folks who always like to be constantly learning, and in this crazy world of international dating, if you met someone and you want to speak their language, those are all opportunities for Rosetta Stone. And this company's been in business for a while, and they've shifted their model successfully online, and I don't see this need going away anytime soon. It just depends, can Rosetta Stone maintain the brand recognition and the quality that they're currently known for? Stock sits today at $13.69. We got an NA for the current PE ratio, and I could not find a forward PE ratio either, so not running profitable here quite yet. You do have cash on hand at $43 million, debt load of $7 million, so a solid little ratio there. And this stock was trading, in that $21 range. This is one where the revenues are going to be relatively predictable, so you're not going to see wild swings, I certainly wouldn't imagine. And yet here we are down to $13.69. That's why it made the board today. On the tip rank side of things, we have one analyst covering a target price of $20. So I would look at Rosetta Stone as a sort of a software subscription-based play. I'm not sure if it's going to have the subscription shelf life of like an Adobe. You know, after you learn Italian, like how much, you know, more do you need to keep up with the program? I don't know how they've set it up, but the need for language instruction is certainly not going to disappear anytime soon. So maybe look at Rosetta Stone as a potential bounce back candidate and see what their projections are for the out years, right? What are they thinking in 21, 22? How is this niche going to grow? And if you see some good things, it might be worth adding to your watch list. All right, last on the board today is a stock that hits very close to home, and that is Turtle Beach, ticker symbol here. These guys make headphones, keyboards, everything relating to both online gaming with the traditional platforms like PlayStation and Xbox. They also purchased a company, Rocat, I think that's how you say it, German-based company that was more into PC gaming. They made keyboards and mice and little things that you could play PC games with. And the bottom line with here, at least the backstory for me, my cost basis right now is about $11. I bought in back in 2018 during the Fortnite rush. It was a silly move at the time, and I bought it high in the $18 to $20 range because I knew my son was pumped about Fortnite and he loved these headphones, and so I just kind of fell off the ledge with this one. And unfortunately, it's been under short attacks over the past year and a half. You've also had the Fortnite craze sort of settling down, and platforms are nearing their end of their current market run, so there's just not a lot of new money in this like headphone space from a consumer perspective. However, I'm sticking in for the long run. And the reason is because all the new Xbox and PlayStation versions come out, you know, hopefully in Q3, Q4. I don't know what the virus is going to do to those production schedules, but you know, how I'm looking at it as an investor, when those platforms do come out, it should boost Turtle Beach's price. So that's why it's on the board here today for you guys. And you can do a lot better than I did because you can get in way below the price I paid. Stock price today sits at $5.51. Again, I bought this stock in 2018, close to $20, $19 something. And I've purchased down all the way, but buying it at so high, I think I have 300 shares total that I've purchased in little, you know, $50 stock increments, and I'm still hanging at like $11. So I'm going to get in on another block of these fives, and then I'm just pushing it off to the side. And if my thesis on the platforms comes true, great. However, if that thesis doesn't develop by December 31st, then I'm out and I'll chalk it up for the tax credit at the end of the year. P/E ratio today at 529. Forward P came up as NA. I'm not entirely sure why, because I know that this company has generally been profitable in the past. I don't know if it's because they pulled their guidance. I'm guessing like most companies have. You got cash on hand of $8 million, very small debt load of $17 million. They actually had a much bigger debt load, and over the past, say, 12 months or so, Turtle Beach they've done a lot for their stock. I mean, they've paid off a huge portion of debt. They were for a long time down to really close to zero on their debt levels. They've had stock buybacks. They've had, you know, executives buying the stock. Again, they were battling with some short sellers, but it's just been one of those ones that, you know, for my luck, it's just tanked, which is unfortunate, but that's part of the game. Earlier this year, though, I was feeling pretty good before the virus scare because we eked up closer to the $9 range. Obviously, way down at $5.51 right now. On the tip rank side, this stock is so small, you only have one of the best performing analysts following it. You got one buy at $13. $20. So ultimately with Turtle Beach, my pain is your gain. If you believe the new consoles coming out in Q4 is going to boost this price like I do, then you can get in a lot lower than I did and make more money. All right guys, so that is 20 stocks total under $20. Again, it's a two-part series, so if you missed part one, check the link below. Please give me a like and subscribe if you enjoy this content. I'll see you on the next video.